Okay, g'day, Rudy here. I've had a couple of questions on what's the difference between an ETF and an LIC, which is perfect timing because my current 4-pack combo ETF, while it has MRS, a miners ETF, and ETP MAG, which is a silver ETF, the other two are emerging market ETFs, of which one of those ETFs is really an LIC. So I'll just go through the first ETF, so that's IEM. So like all ETFs is they track an index. So they might track the Aussie index or the US index or the NASDAQ index. This one tracks the MSCI Emerging Markets Index. So that index consists of 800 companies in China, India, Brazil, Taiwan, South Korea. So all this ETF does is track an index. So it's not taking positions either way. Its job is just to track the index, which is what most passive, which ETFs, most of them are passive, except for the LICs, which we'll get into. So ETS came about really because of this, the 0.69% per annum fee, which is cheap. Or you get the Aussie indexes where you're paying 0.2%. So that's the IEM ETF in my 4-pack. And if we go to FEMX, which is the fourth holding of the 4-pack, or the second holding of the emerging markets part. So it's a Fidelity. So this is a listed investment company. So one of the differences, so Fidelity, they actually have picked 50 specific companies from the same area. So they're not trying to track the index. They're taking a specific, bias towards or against a stock in the index. But I like it because if we just go back, IEM, I like the chart. Looks like it's going to keep making new highs, so we're targeting 14%. FEMX, from the chart perspective, is looking very sexy, breaking up above resistance. We're targeting 16%. So Fidelity, basically, as I said, they pick and choose what the stock they're going to hold, and for that they charge a higher management fee, 0.99% per annum. So really an LIC is like back in the old days of advising, we used to sell managed funds. So managed funds with each of the fund managers, BT was the big one. They'd go and pick a portfolio of stocks that are going to outperform the index. Then they'll charge you 1 or 2% per annum. And as an advisor, back in the day, you used to charge the client 5% to get in there, which was a rort when you think about it. Anyway, that was the industry back then. So an LIC is like an ETF. It looks, except the underlying, they're not trying to follow an index, so it's a lot easier, it's a lot harder. Whereas this IEM, all this ETF has to do is track an index. So that's pretty easy. They're not making any investment decisions. Whereas these guys have to go and pick. And they've picked 50 companies. And if we have a look under the bonnet, so this is their top 10 holdings. Taiwan Semiconductor, that's the behemoth of the developing world. And you can see all these, I won't go through all the names, but this is the difference. So in their fund, they got a weighting of 8.5%, whereas the benchmark has a weighting of 10%. So they've decided to go underweight. Then their second largest holding, HDFC, they've got 5.6 against a benchmark of 1.4. So they're way overweight on this one. So as Rudy does, we go and look at the charts to see whether that's right. So if we look at Taiwan Semiconductor, so these are monthly charts. So that's its prior resistance, now support. No technical damage there, but it's an essential to have in the portfolio, because if you get it wrong, 10% is a big weighting, so you've got to have some exposure. But again, there's nothing wrong with that. Might come down, but it's pretty strong support down here. So they're underweight that, which is good. And I'm even more pleased with their overweight with HDFC Bank. So as we said, they're way overweight compared to the index, and that looks pretty sexy myself. You can see this is, so that used to be resistance. It's now popped its head up and finding traction. So that looks really good. So Fidelity are doing a good job, and hopefully that comes through their share price. So I chose it just to have a fair balance, one ETF that tracks the index and one ETF you got a fund manager trying to beat the index. Alright, well, I hope that makes sense. If you're not subscribed, do subscribe. Leave us a comment if you agree, disagree with what I said, or want to know more. Okay, thank you.